What's up everyone, my name's Robbie, this is Robbie of Manila, and today we're talking about how to find stocks to buy with Charles Schwab. Now when it comes to finding stocks to buy or investing in stocks, it's really kind of a subjective way of thinking. The types of stocks that I might be interested in buying may be completely different than the stocks you're interested in buying. For example, I don't seek stocks that just pay dividends. I mean, if a stock pays a dividend, that's totally fine. But I wouldn't go out and buy a stock just solely based on the dividend it pays. Now, you on the other hand might be a dividend investor, and if you are, then you're more interested in dividend yield than I am. And so we're gonna have different opinions on which types of stocks we wanna personally buy. So of course, we're gonna have companies that overlap, but in general, the process I use might be totally different than the process you use to find stocks. So in this video, I'm not gonna show you exactly how I pick stocks because maybe the way I do it isn't right. I mean, there's many ways to find stocks to buy. So what I'm gonna do is, I'm gonna show you some of the tools that you can use to help you find stocks with Charles Schwab. So without further ado, let's figure out how to buy stocks with Charles Schwab. Okay everyone, before we begin, let's get something out of the way, and it's that I used to be a financial advisor, which means I am not a financial advisor anymore, don't have a securities license anymore, so this video is really just about opinion. It's not advice. I'm not telling you stocks to buy, I'm just showing you the process that sometimes I would go through if I was looking to find a stock with Charles Schwab. Another thing you should know before we begin is that I'm approaching this from a long-term investing standpoint, not a short-term trading standpoint. Now, long-term investing uses something called fundamental analysis, which relies on the fundamentals of a company, like the balance sheet, the statement of cash flows, the income statement. Technical analysis, on the other hand, is for short-term traders, and that relies on things like trends and patterns and technical indicators to help them find short-term trades. And so long-term investors use a completely different methodology than short-term investors, and I'm approaching this as a long-term investor. Okay, so let's go ahead and dive into the computer, but first, why don't you hit that like button and satisfy the YouTube algorithm. Okay, we're inside charleschwab.com. Now there's some tools that you're likely gonna wanna use when you're trying to find stocks within this broker. So the first place I'm gonna go is, I'm up here on the research tab, and you can see whenever you're on charleschwab.com, if you wanna find the research tab, the page I'm on, you just go to the very top here, drop down, it says research. If you just hit research, you're gonna get onto this page. So that's where I am, just so you know. But the thing I want to do is I want to go into research, and I want to go into something called screeners. So let's talk real quick about what a stock screener is. So a stock screener allows you to screen stocks based on certain criteria. Just let's give a random example. Let's say you want to find stocks that just have PE ratios of less than 20. So you can go into a stock screener and you can find every single stock that has a PE ratio of less than 20. Because if you have certain things that you look for in a stock, it allows you to only find those stocks. So here, I'm gonna go into something that's already actually pre-made by Charles Schwab, and it's this one here. It's called the Dividend Growth Screener. Now, so this will be more for a dividend investor. Some people love to see companies that are growing their dividends. So if we hit this Dividend Growth Screener, which is already pre-made, it's sitting there for you. It shows you at the top what's in the screener. So if, for example, you don't see this, you can always remake the screener. So how would we remake this? Just real quick so you can see. Right here it says universe is domestic. So this is only companies within the United States that trade within the United States, domestically in the US. Market cap. So how big is the company? This is showing a small, mid, and large cap companies. So just for example, if you wanted to recreate this, if you're not seeing it, you could go to the search criteria on the left side and you can type in universe, and you would hit universe, and then you would click domestic. And then again, if you wanted to then add market capitalization, you would go market capitalization, you'd hit that, and then you click small, mid, and large, okay? So this is how the screener is made up essentially. Okay, this is the screener. And let's just go through everything that's in there. We already said domestic. We said there's small, mid, and large caps. Then we go to sectors. So there's no sector selected, so don't worry about that. But then there's dividend yield. So this is saying that it's got to have a dividend yield of over 0.01%. So this is basically saying any company that pays a dividend should show up in here, unless it pays a dividend of less than 0.01%, which is like, pretty much nothing, right? It would have to be 0.009% or whatever. So Then if we have increasing or decreasing dividends year over year, and this says increasing. So there you go. That is the main thing that's in this screener. It's showing you that there's an increasing dividend year over year, meaning that last year their dividend increased to what it is now. Okay, so next is Charles Schwab equity rating, none selected. So basically this is just showing us, and I'll show you here at the bottom in 1 second. And then there's the SER, so Schwab equity rating percentile ranking is 1 to 15. So the first percentile are going to be the best Charles Schwab analyst rated stocks down to 15. Okay. And so if you go through this, you're going to see that there are on the side here, description. This is the name of the company. Aaron's, for example. This is the stock symbol, AAN. It's domestic because we know that the screener is domestic. This is how big the company is. This is a small cap company. It's $4 billion. It's in this consumer discretionary sector. It's the industry is called specialty retail, sub-industry. So you can have all this stuff, and you can even sort by these things. You have the annual dividend yield is 0.029. So there you go. And then increasing year over year, and it's 16%. So increase 16% year over year. So then you have Charles Schwab equity rating. So this is showing the highest equity rating stocks first or whatnot. So these are A-rated stocks. Schwab equity rating is A. And then you have the SER, Schwab equity rating percentile rank is 2, which means it's highly rated by Schwab. So as you can see here, hopefully, this is already a way to kind of screen for stocks. So now you have 104 different stocks that you have the ability to look at. So okay, that's great so far. Now let's go and say, once we have these 104 different stocks, of course that's a lot of stocks, so now we have to figure out how to go ahead and find which ones that we want to buy. So let's go ahead and let's hover over, just for example, let's go to the first one. So AAN, Aaron's Inc. So we go to Aaron's Inc., hover over this real quick. It's going to show us some information. You know, this is pretty basic information. The latest price, it's got the change, which the market's not open, so there's no change, no volume today because the market's not open, high and low, and all that stuff. So, you know, it just shows you a lot of stuff. Not a lot, but it shows you some relevant, pertinent stuff. Then Aaron's Inc., it gives you a little summary of what the company is. So these are things that, of course, you want to know when you're trying to figure out what the company is. Now, if you want to go and look at the company's full business summary, you can do that. But another thing you can just do is click on the ticker symbol. So if you click on the ticker symbol, it's going to take you over to the Charles Schwab area stocks. It's under stocks and research, and now we have the company. And quickly, we're just going to show some stuff here so you understand what's on the screen because it's important. But then we're going to show you the research report, which is the part that I really want to touch on. So just really quick, you can go over the quote details. So this is the past 5 years. This is the chart that's showing up. If you want to see a chart that's 6 months, you can click 6 months. It's going to show you a shorter time period. A little zoomed in so you can see a little better. So there you go. It shows you events. So when were dividends paid, when were earnings released. You can also turn events off, so stuff like that if you want. And then on the right, you have just the details. You have the open, you have the previous close, the range for the day, the 52-week range. So how is the stock traded over the past year? This has been a giant, widely swinging stock. 13 was the lowest the stock got to, up to 78, okay? So huge difference. So over here we have beta at 1.69. Now beta, this is the 5-year beta, and what beta is, it's a measure of volatility. How volatile is the stock trading? A 1 meaning that a beta of 1 basically means that the stock is volatile as the overall market, or whatever it tracks, the S&P 500 for example. So if it's 1.69, it's more volatile than the S&P 500 or whatever it's tracking, its beta is tracking. If it's less, so if it's 0.5, it's less volatile than the market, okay? There's average volume, the put-call ratio. So a put is bearish and a call is bullish. So a 2.4 is the put-call ratio for the day. A put-call ratio for 30-day period is 0.6. Okay, so let's get down into the things that I really think is important for us to understand, which is Schwab equity ratings. So when we go to Schwab equity ratings here, we're going to see the actual analyst or research ratings of Charles Schwab. And let's go through this to see if it can help us figure out whether or not to buy stocks. So this is according to Charles Schwab. And according to Charles Schwab, Aaron's is an A, which is an outperform, and it's a strong outperform, and it's in the second percentile rating, meaning that Charles Schwab has this stock as being a very highly outperforming stock. So that's a great thing if you are going to rely on the research reports of Charles Schwab. Now, of course, they're not always right, but it's good to kind of know what the analysts think of stocks and why. So if you go to the price volatility, let's back up. The thing about Schwab analyst ratings, it's kind of nice because there are things like price volatility. So if you're not interested in a company that's more volatile, then you might want to see one that's not on the high end. Now, if you're okay with that, then that's fine. But this is a place that you can look to see what's going on. The rationale behind the A rating. So each of these specific factors are rated. So valuation grade gets a B. And this meaning, what they're showing is the balance sheet and the income statement valuation. The quality grade, which is how profitable the company is, and the capital intensity of the company is an A, so that's good. Sentiment grade, meaning that is there momentum behind this stock? Is it have momentum behind it? Is it have the potential of having large price movements, maybe with volume, to continue an upward trajectory maybe? So price momentum is neutral. And then, of course, on the right side too, it even tells you the importance. So price momentum's a medium, is medium. You know, price momentum is actually pretty much proven to be a important factor in investing. Of course, as a long-term investor, you might not care about momentum as much, because if you buy a stock and you don't mind if it loses some value over time, then you maybe don't care about momentum. But if you want to find stocks that have the potential of continuing an upward trajectory, momentum's a great thing. Momentum can potentially be a great thing. We can keep going down, and then they have the earnings per share, we have revenue, so all sorts of different things. Then we have the earnings forecasts. So we have a lot of stuff. Then we have headlines, and then there's a bunch of legal stuff at the bottom. So that's pretty much all the things on the left side of this report. Now we go over to the right side, and we can see things like the business summary, so you can quickly take a glance and see what the company's about. Now, if you wanted to read more, you would just go down to page 2, because it says here for more details, go to page 2 if you want to learn more about the business summary. You have the overview. You can go over, it shows you how big the company is, what it's trading at. So it's 3.7 million, it's small cap. We went over this stuff. The sector, the industry, the metrics, okay? And then we have some other opinions, which actually is very important, in my opinion, if you're using research to help you find stocks. So looking at other brokers or other research firms and seeing what they also have to say. For example, Ned Davis has a rating as a buy, which is a positive thing for this stock. Market Edge has a long rating on it, meaning that they think it's a good stock to buy. And then Reuters also has an outperform. We can see that a lot of the different research firms think that this is a good stock to own. So now, what do I think? So how would I approach this? Now, there's different ways I would approach this. Maybe as a dividend investor, I would approach this differently than if I was a person trying to find maybe undervalued stocks or stocks that I think have the potential to mature more. So, for example, if I was a dividend investor, I might not be interested in this stock because the dividend is not very high. So if we go down here, we can just, on the right side, we can see the dividend yield. So right here, it says dividend yield percentage, and it's 0.3. So that's not very high, considering the S&P 500 has a dividend yield of the average company in the S&P 500 of 2%. So 0.3% versus 2%, of course, it's not a very high dividend yielding company. So this might not be a company for dividend investors. Now, let's say you're okay with a 0.3% dividend. Maybe you don't care about a lot of yield. Maybe you don't care about dividends. So then what would I do? Well, some of the things I'd want to see are, if I'm someone who's not going to go through this myself to kind of create a valuation on my own, I would want to see what the other research firms have to say. We already went over that. We know these other firms actually have some good ratings for the stock. I like that. I would want to see what the estimates are for things like earnings. So I would go here to earnings per share, and I would see this is an estimated third quarter 2020. So how are the earnings there? A little bit down. Could be a seasonal thing, but they're better than first quarter of 2020. They're actually better than the Q4 of 2019. They're even better than Q3 of 2019. So I would compare this to Q3 of 2019, so 1 year ago to today, the earnings are better. At least they're estimated to be better. Okay, that's a good thing. That's a good thing. And then the number of analysts that think this was going to happen, there's 9 analysts that believe this will happen. So that's good because we like the ability of other analysts also agreeing that this should happen. And then we can look at the annual data, and we can see all of 2020, the estimated earnings per share are 3.98. Compare this to the past. So we have all the way back to 2016, 1.91, 2.16, 2.77, 0.46, and now we have the highest earnings over this whole time period going back to 2016, and we have 8 analysts that are on board thinking that this is going to happen. So far, this looks good. This looks like earnings-wise, the company could be a potential buy if you're just buying based on earnings and estimated earnings. So figuring out whether this company is expensive or cheap, you might look at the relative performance or the relative number versus the S&P 500. So here you can see the price to earnings of the forecasted, so the estimated earnings per share in the future. So a 45 for the S&P 500 versus AAN, which is 13.9. So this means a lower forecasted earnings per share means that it could maybe not be expensive. It's possible that it's not expensive. It doesn't mean it's not expensive. It means it could be inexpensive, potentially, depending on other factors. So then you come over to things like price to free cash flow, which is an important metric, and this is as of the fourth quarter. And it's got a lower price to free cash flow than the S&P 500, which has a 22 versus this company with a 10.8. So far this company is not looking like it's a very expensive company. It's not being considered a growth company. The market might be considering it a value company. So if you go to the price to book value, which is kind of like the net worth of the company, the assets minus the liabilities, it's 15.5. The S&P 500 is at 15.5, the average company in the S&P 500. You go over here to AAN, it's 2.4. So much less than the average company in the S&P 500. If you'd want to get into this further, you would look at the price to book for the industry or the sector. So you would want to kind of dive into this a little bit more and then compare it to that, because the S&P 500 has all sorts of different companies, everything from very highly capital intensive companies that might have very low price to book values to things like technology companies that might have very high price to book values. For example, Apple does not have a lot of assets, right? So the company is a company that doesn't need a lot of assets to make lots of sales. So they have like a 27, 28, 29 price to book value, whereas this company has a 2.4, so a lot less. But it's comparative within a industry and then how much the price of the stock is. Another thing I would look at here is the valuation grades. So I would want to make sure that the company has a good valuation grade. The balance sheet is okay because the balance sheet is important. The income statement's okay, and these are not bad. So balance sheet is neutral, income statement's positive, okay? So you may be asking, would you invest in this company? So would I personally invest in this company? I would look more into this company basically. So I would put it over on the side. I'd read through maybe some of the financial statements. I might go to the website of the company. I might want to see more about what it's doing, its business model, things like that. And then I would want to make sure that I looked at things like debt, make sure that that's not a problem for the company. And then if a lot of these things are having, let's say, green lights, then yeah, I might actually invest in this company. I mean, at this point in time, looks like there might be some upside to it. So there you go. That's that part. So let's go back and let's also just take a look real quick. On the right side, it does tell you, without having to open up the Schwab equity rating, the different ratings. So Ned Davis Research, like we saw, it was a buy, CFRA buy, Reuters outperform, Market Edge long. So we can go in and we can look at the Ned Davis Research report as well. And so this will tell us also additional things, and we can read through the Ned Davis Research report, which is also a great thing. So you have all these different ways of looking and seeing if this stock is a buy or not. And each of these are going to have their own interesting kind of take on the stock. So if you're really interested, I would look at all these different reports first before I would make a decision. So now let's say this stock might be a maybe. So I'll put it in like an Excel spreadsheet and I'll look back into it, look through a little bit more, try to figure out if I like the stock, and continue kind of researching it until I feel comfortable whether I buy the stock or not. So going back to the screener, now let's take some of the things we just learned about research and let's incorporate that into our screener. So now we know that we have the ability to use research of other analysts to help us find stocks. So what if we incorporate that? So let's say that company that we just looked at, Aaron's, did not pay a high enough dividend for us, and assume that we are dividend investors looking for dividend yield. So let's go to dividend and let's go type in dividend yield. So let's say you want to have a company with a certain amount of dividend yield. So you could go here and you could say, I want a company with, let's say, 2 to 6%. So you can have companies with a 2, 3, 4, 5, or 6% dividend yield. Maybe more than 6% is too much for you. Maybe less than 2 is not good enough for you. Whatever it is. There are 1,430 companies that match this. So let's go into another thing. Let's use the universe and let's add domestic. Let's say we don't care about international companies, so only domestic companies. So now we're down from 1430 all the way to 982 stocks. Still a ton of stocks, and we don't want that many, so we want to narrow this down even further. So let's use what we've learned so far about the different analyst ratings. And so let's use analyst ratings to help us find stocks. So let's hit analyst ratings here, and let's utilize some of the different ratings that we have available to us. So let's use Schwab equity rating. Let's say we want a Schwab equity rating of an A or a B. So now we're down to 257 stocks. Now, let's even make this a little bit better and say we also want to have a company with a Morningstar rating of at least a 4 or 5. Now the thing is, sometimes they're not going to be companies that have both a Schwab equity rating and a Morningstar rating. For example, Aaron's that we just looked at, it did not have a Morningstar rating. It wouldn't show up here. So take that into consideration. So now we have 28 stocks. So we could take a look at those stocks. Now let's say if we don't want Morningstar, let's take Morningstar off. And let's say you want to look at Ned Davis Research that has a buy also. So now you have 12 stocks. So let's take a look. Let's see what we got here. We've sorted down to 12 stocks. So now we have 12 different stocks that we could potentially buy. And we can take a quick look here and we can see the first one is Best Buy. So Best Buy has a dividend yield of 2%, so it's within the range that we're looking for. It's a domestically trading company, so it's got some of the things that we want. It's a A-rated Schwab rating, and Ned Davis has it a buy. So, is this a company we want to look at? Of course, maybe this is a good company. We go through it, we did pretty much what we did before. We hit BBY, which is the Best Buy symbol. We take a look at the page. We see how it's doing. We look at some of the details. Okay, so there we go. We can use the screener to help us screen stocks and kind of limit the amount of stocks that we need to look at. We can figure out what factors we want to use. Maybe we want to look at analyst ratings. Maybe we care about dividends. Maybe we care about price earnings ratios. There's all sorts of different ways that you yourself personally may be interested in finding stocks. Again, to reiterate, the stocks that I want to buy might be totally different than the stocks you want to buy. Stocks are subjective. So I really hope this video at least helped you understand that there are tools available with Charles Schwab and maybe some ideas of how to use some of those tools to help you find stocks. So that's all we have for today's video. Please let me know in the comments below if you're using Charles Schwab to help you find stocks and if I left anything out. So before we go, please hit the like button down there if you got some value out of this video, and maybe subscribe if you want to see more videos like this. So that's all we have for today's video. Now why don't you watch another one of my videos by clicking on the end screen coming up right now.